Good morning, traders. This is Rose. It is Monday, August 29, 9 a.m. Eastern Time. Welcome. All right, today's basically Fed's week, I should say, because we're going to have almost every day Fed members speaking. So you're going to have possibly some kind of volatility if we can get any. It's been low so far. Friday was pretty good. It was decent. At one point it went up to 20.8 TR, and it just hovered back down. But really the entire week was actually eventless, except Friday. So this week we're going to have, starting around 2:15, maybe even earlier, Fed members start to have their speeches. They will move the market. We don't have any news today other than 10:30 Dallas Fed manufacturing survey, but we don't need to worry about that much. It's not a market moving event. And tomorrow, consumer confidence, Case-Shiller home price index starting at 9 o'clock, and then 10 o'clock consumer confidence, and then the JOLTS job openings at 10 a.m. Then you got Fed members again after that, or starting around 11. Then Wednesday, ADP employment, 8:15 a.m. Then the Chicago PMI, 9:45. Then you have, if you're trading oil, 10:30, and then more Fed speaking. Now Thursday, PMI is going to be followed by, Chicago PMI is on Wednesday, but the actual PMI is on Thursday, 9:45 a.m. And jobless claims 10:30, ISM manufacturing 10. So Thursday is major, and then we get the employment situation on Friday. It's 8:30. So this week is jam packed. We're gonna get some volatility, but let's talk about the monthly chart. We have a nice sell signal bar on the monthly, but overlapping weeks, so we are in some kind of trading range. But it was a doji last week. It prominently became a good bear body. Wish that it was a little bit higher and maybe larger than its week, but it closed bearish. So you can see the weekly chart here, okay? It's a pretty strong bear bar closing on its low. And markets, I mean, if you, I'll go back to the 5-minute chart and daily chart, so you'll see that daily, 2 days, Thursday and Friday, we sold. So we even gapped down pretty much. You can see the gap here. It's probably going to get continuation, and you can see that it gapped down and it's getting continuation. But we are at a critical area, which is a breakout point. Also, double bottom neck. So this area, we already tested. If we continue to sell today, and this is where I think that we might end up coming. Last week I said that this area is support. It'll probably going to act as support, and we might actually go up. Because if you look at the prior trend, so we have 1, 2, 3, 4, 5, 6 weeks, okay, out of 8 weeks consecutive, with consecutive weeks being very bullish. We have a bull trend here, and we're pulling back to the 50% almost, right? So if I actually measure this, we're getting very close to the 50% pullback. So we could end up coming down here and test the 39, 83, 82 area before bouncing. But bulls want to, see another possibly leg up and maybe go up and test the May 4th high again, and eventually go up to the April high. Okay, so they want to actually test this trend line that they failed pretty much testing we are going to retest this trend line. Bears want to break this area, okay, come back, maybe bounce there, but break it, and then come back and test these lows. This is what the bears want. But the bulls want a reversal back up, and bears are going to get more interested in a double top, possibly again, if we test this trend line and we're not able to get above it. But the ultimate goal for bulls is to test these highs, test the trend line, and then get up to here. So this is basically a major sell zone, which was mitigated once. But it wasn't mitigated twice. So it's still a strong, okay, sell zone in my opinion. And when we get there, and if we get there, I'm going to sell because we're going to come down, because we have, and we will have a much more prominent trading range going forward in the year. So it's an interesting week this week, and it's the end of the summer, basically, and the school year is beginning. So back to work, vacation is going to be over, so I think we're going to get some kind of volatility soon. But I think this week market will decide. Because of the bullishness, I think we're going to go up a little bit. Now, if we do go up, the weekly 200 moving average is a natural resistance. Okay, so that could be a let's sell higher and then get a couple of legs down. That could maybe give us some kind of head and shoulders or a bear flag perhaps, but I would like to see wedge bear flag. So if the bulls take over, and if we do come down briefly, but somehow get above that 200 moving average with this 20-day moving average, or this is week actually, so 20 bar moving average somehow, okay, if we get above it, I'd like to see bulls push this and then maybe get a 1, 2, 3 wedge with some kind of bear flag, and then sell in. Selling would be very strong, I think, in my opinion, if we do get rejected. But that doesn't mean that we would end up selling very strongly, because remember, bear flags can break out and then can also fail to break out right at the lows, and then we get these grinding, okay, bullishness on and on and on, could go all the way up there. Okay, we get this on the 5-minute chart all the time. No difference on higher time frames. Price action is fractal, meaning whatever you get on a higher time frame or smaller time frame, you'll see the same price action all over. Does not matter. And that's the beauty of trading with price action. Okay, so that's what we got on the weekly. Now let's talk daily a little bit more, detail. So this level is important. 2022, this year's 50% pullback. Okay, so we've been hovering there quite some time. So this level of price action is very important. You can see it was a support. They tried to turn it into resistance, but ended up being a support. But because they dipped so much below that, and these highs, equal highs, liquidity was there, so we came back down. Now we finally, after twice testing it as support, we turned into resistance, okay, and we made wedge 1, 2, 3, or 1, 2, 3, double bottom, higher low, major trend reversal. But look what we ended up going and rejecting again. So, and then we came back under. Could this be a head and shoulders pattern? Well, it's a very strong day, Friday, sold. So bears got their second leg down. We might end up going up to July, I don't know, what is that? July 21st or 22nd? I think it's 22nd. We could end up testing that high, but this is what I'm interested. It's June 28th. Okay, so this high and that high, like I said, on the weekly chart, daily chart, this is probably going to act as support. We might even dip all the way down here and then finally go back up. But look at the way that the moving average is. This is 50-day moving average. This is 100 right here. this is 200. Okay, so I'm using the 20 EMA, not the SMA. It's on the daily. So if we we're probably going to come back and test that. Somehow we're going to meet that 50. Right now the 100-day is holding, but if the 100 crosses above, I'm sorry, if the 50-day moving averages crosses above 100, this is where even if we come down a little bit, we could end up going back up again. But there's very climactic day, so the high, and then there's a gap here. These are all targets for bulls, and they want to close those gaps. Okay, there's a small gap here that the bears want to close. So today is going to be very interesting. Remember, if yesterday's price action, meaning Friday, is a sell climax. Okay, so let's go back to the daily. I'm sorry, 5 minute. So let's talk about what happened on Friday. So Friday, we had some news in the morning. It was Jackson Hole Fed event. Hang on a minute. Excuse me. So Jackson Hole basically almost like an FOMC, but really not FOMC. Oh, wait a minute. You guys are having, okay, wait. Okay. Can you, well, that doesn't matter. So let's see if they can actually rejoin and see if it works for them. On my end, it seems to be fine, so I'm going to continue. All right, so we had a climactic move down after that news event, right? It was actually confusing in the morning, but I did say that it's better not to trade this. Okay, we had a climactic couple of hours of, especially the last hour of the day prior to Friday, Thursday. We tried to get some continuation, but unfortunately the news event failed. But we were at the highs. Thursday high generally is resistance, so we came down, big down, and then the big up news event. We finally found double top resistance, and we started to sell. Okay, so if you did sell, okay, so you're still in a trading range here, right? So you're basically looking for some kind of breakdown and possible measured move down target, and that's what we got. So you expect several legs down, and that's what we had, right? So bear flags. This is a bear flag, double top. Then we get another one right here, micro double top, and we kept selling and selling. And I said we have 20 bar gapping to the EMA. Most likely we will sell at the EMA. I didn't sell the first bear bar. I waited for a second sell, which was bar 48, and ended up swinging this down, taking profit. I believe I took profit somewhere here, and then I quit the day. I expected to go up a little bit, but look what's happening here. This is pretty climactic, very steady. Not climactic. Climactic selling was here, but this is a very steady selling. So 50% chance we're probably going to get follow-through selling at the open today, and 75% chance of at least a couple of hours of sideways to up trading. And that could start at the end of the first hour. So we're going to see how that goes. 10:30, 11, if we can get some kind of rotation. But I'm going to expect, we already are going to gap down. I mean, we closed at settlement prices 40.57, 75, say 40.58. We gapped down just about, let's see, 29 is, so 30, no, actually 36, 35 point. Yeah. I'm sorry, that's 29, not 18. So we're not even just 30, but it's pretty gap down. So we're going to be just about a 30 point, maybe 25 point, I say. But depending on what this bar does, it's actually closing in. So it's going to be around maybe 28, 27 points. Okay, so let's see how this goes. We could quickly come down at the open and then start to go back up. But I'm just gonna mark that as a gap down, and I'm gonna treat it like that. So now the hourly chart, the way that I look at it, I mark the last week's start and last week's end, and I have 5 days here, obviously. So I take the high of that week and the low of that week, and the mid of that week is important to me. So we're already going to open right here, and we do have some kind of support, okay, right here. You can see we had a bull flag, okay, and head and shoulders failure turn into a bull flag and a pretty good breakout. So this right here is basically target, but we do have a good buy zone and another buy zone here if we start to, keep pulling down. There's another one right here. You can see that it's a really good, strong 3,900, 3,920. That area is a buy zone. So if the bears keep selling, okay, so this area is an interest to me, okay, because of that resistance turn support, support and a breakout. So this is becoming some kind of attraction, some kind of magnet, okay? So we're going to break down and we're going to open up just about here. And then let's see. Sorry about the background noise. Let me release this cat. Just hang on a minute. Sorry about that. Okay, so I'm hosting neighbor's cat. It's BPA Chester. He just wants to be here in the trade room. So that right there, I'm going to mark that just in case, because it's an important area before that buy zone right down here. So if we do continue, we could bounce at the 40.15 and then maybe go back up briefly, but this area could, last week's low could end up being some kind of resistance, and so we could sell, come back down here. This is where I want to buy, and this is where I want to buy. Okay, so we'll see how that goes. So at the open, I mean, that will be a 15-point drop, but we'll see. All right, so can we actually buy at the open right away? And then if that happens, that means we're going to go into some kind of trading range. And if it's not going to happen, obviously, we're going to open up somewhere down here. But can we actually make a double bottom and then start to go up? Yes, bar 70 is going to be my target, okay? And this 76 is problematic because of the EMA. Can we make a double top at the EMA and not test the 70? We're probably going to test the 70. So we could end up going into some kind of trading range, okay? So it could come down a little bit. That will be the continuation, and then go into a trading range. And somewhere around 10:30, 11, we could end up getting a bull trend reversal. That's possible. Okay, so I'm going to be keeping my eyes on that. Globex chart here. Okay, so I have a little bit more time to go over the Globex chart. Globex chart here is we have a tight range. Okay, so I have the Asia range and Globex high and Globex low. So we found support. Okay, so is this trying to see, as long as we stay above this, okay, we're probably going to test, and bulls are trying to close that gap. Look what happened here. The 50% of Asia is holding, okay, and there's some kind of resistance here because this is a trading range after all. So when we get here, from there to there is actually resistance, okay? Bears want to swing this down once again, and they're trying to prevent this gap to close. This gap did not close, okay? So we still have a gap open right there. Bulls are trying to close. If they do close that gap, there's an imbalance here. This is where they're trying to go. Test that, okay, that area. That area is, especially that bar, is magnet, and it's marked. So I'm also going to look to sell from there. So it's a tight trading range. We will break out quickly from either side of the Globex range, okay? So that should not be a problem. Gap is going to be closed with this. Even if we do close it, that area is also, stops are there, okay, some kind of liquidity. We could end up selling from there. That could give us 1, 2, and 3 push wedge with a bear flag on the Globex, and we could end up coming down, okay? So I am watching these areas. I will trade into them, and I will trade from those areas. Okay. Now on the 4-hour, I said, well, I had some targets on Friday, which we met those targets. This was my resistance. This was a buy zone yesterday, which I bought. I'm sorry, last week. And I said, this is resistance. Be careful. We're also testing just about a 50% of, okay, this climactic sell-off. And we did make 1, 2, 3, actually 4 push, or you could say this is 1, 2, 3 push bear flag. And it comes down. Okay, so I was hoping that bulls would show up underneath this equal lows, but they are kind of showing up except at the breakout point. So they're testing the breakout point at the moment. We're sideways with a couple of hours, but that's the overnight session. And we could end up actually selling. Most likely we will, because we have a strong structural breakdown. That means measured move. Okay, so let's measure it just to see where the bears are. See how they just came so close to the vicinity of the targets on the 4-hour chart. Now, I'm not snapping all the way to the extreme, so you can do that on your own chart, but I'm giving you reason why we're reversing. Now, is this okay to reverse? Could this become a grind and go up to the 50% or to this breakout? Possible. We could get that. We could sell a little bit, finish that, okay, some equal lows here. We can find support and then reverse and the 50% test of that 4-hour sell-off. It is possible, but right now we're going sideways. It could be a pause. Okay, so here we go. 1, let me see. If 1 to 2, that's the next push. Okay, so I'm looking for a wedge. So we've got a wedge here. Okay, so bulls want to take over and they want to go back and they want to test this area again. But good luck with that because it's kind of difficult because of these breakout points. Sellers are waiting there heavily. If you put a volume profile here, you're going to see that this area, especially right around here to this, very heavy, okay, and with the volume profile, and we'll probably end up selling from there, even if we just kept steadily buying and buying. So I'm going to get rid of, well, I'm going to keep that because sellers could be there as well. In fact, if you actually go to 2-hour chart, see that these gaps, there's a little bit of overlapping. Sellers are there. You don't need any fancy volume profiles or anything. You could simply see exactly where those heavy volume areas are and where the sellers are and buyers are waiting. Here's 30, right here especially. Bulls are trying to close that gap, a possible wedge, and we could end up selling. Yeah, so Should be interesting. Okay. Well, it doesn't move because I'm trying to figure out, guys, I just stopped moving it. Can you see it now? Because I'm trying to get some support for you guys. It should be fine. I mean, I'm not having any issues. Just let me know if you're still having issues. I'll address it. But it looks like it's only a few people. Okay. All right, market is up and running. Remember, 50% chance of follow through, selling at the open. We have gap down. Okay. And we are still inside the Asia range and the Globex, middle of the Globex range. The market hasn't made any decision yet, so we're going to wait a little bit. I mean, my screen is not frozen. Everything's working fine on my end. Could be something to do with okay, hang on. Let me address this. Okay, I stopped moving the mouse. Okay, so hang on. Let me check something. Okay, I just sent out a message to see if I can do anything on my end to remedy this issue, but everything's working just fine on my end. All right, so I'm waiting for bar one. I would recommend you guys to exit out and just come back and re-log in to the webinar and see if that helps again, or if it doesn't. Okay, like I said on the daily, 50-day moving average is magnet. Now, if this is too low, obviously no one's going to want to sell this low. Okay, bears want to see some kind of pullback. Just trying to see. I don't have enough data on the 5-minute, so I'm not even going to bother. But it's too much of a gap down, too much of a low prices, and if the bears, think that this is too low to sell, most likely we could end up getting some bull bars. Okay, so we'll still want to test the Globex high and preferably break out and close that gap. But last week's low, last month's low also, that red line is going to be acting as resistance. Okay, this is August open, so we are obviously bearish. I'll keep them for now here, but you don't really need them. They're on this chart. All right, so good bull bar so far. Let me check my data connection real quick just to be sure I'm not lagging. No, I'm not lagging, so it's all good. A very big bar. I mean, 15-point long bar. All right, so the target is they're trying to reach 40-41 area. Bulls are trying to reach the 40-41 area. Good bar. I like to see 2 bull bars for continuation. I like to see bar 2 to close on its high or mid, but close bullish with a decent bull body and not come back and overlap too much with bar 1. That would help us close this gap and possibly go and test bar 76 or 70. So I'm going to wait for bar 2. Can you see the moving? I'm not going to be able to move my cursor every second, guys. Okay, so, but I understand. So I will try to keep the cursor on the chart, but I have a chart that I trade on. Sometimes I move. I think Al trades on a different machine and does the commentary on another machine, 13-inch monitor he talks about, or 13-inch screen laptop. I trade on the same machine and same application, so that requires moving my mouse onto another screen where I open my trades. So you may not be able to see the mouse all the time. But don't panic. Do report back. If you guys are having any issues, please email BPA support. Okay, the email is on the Trade Room website. So because we receive no emails, you know, we don't treat this as support issue. So you guys need to report back to BPA support. All right, just watching the bar 2, but I think there's still resistance here. Okay, we could go into a trading range. Can the whole entire day become a trading range? It is possible, but I would determine that somewhere up here, obviously. So we've tested the Globex high. We have not broken out of it, nor we closed a bull bar yet. Look where we are. We're smack in the middle of the 100-day moving average and a 50-day moving average. So the market is trying to decide what it wants to do. I'm waiting for bar 2. I haven't opened any trade. I don't like to trade first 2 bars. I like to wait. Because if I were to buy bar 1 opened, I have to put, I'm sorry, bar 1 closed, I have to put my stop somewhere, and that somewhere is below. And when I said, you know, this bar is big, and I measured it, it was about, let's see, so 20, 38, about 17 points in change, 17, 16 points. That's a lot of risk for me. Okay, so even with micros, it could be risky. So it's better to wait for bar 2 to see what the conditions are going to be like. So 30 more seconds. Bulls need a consecutive, 2 consecutive bull bars. Can the bulls close this bar bullish last second in 18 seconds? Well, it doesn't look like it wants to, but you never know. So what's happening here? Bulls are hesitating because there's a strong resistance here. Okay, remember, 50% of the time you're always going to get some kind of follow through, whatever the prior, okay, you know, price action was. Now that follow through, you could see we gap down, so that is actually sell. But bulls did show up with this, which is fine. But if the second bar is no good continuation signal, you know, I'm just going to stay out of it. I'm going to wait at least for bulls to close this bar 3 on its high. Okay, take out the bar 2 high, then that's a continuation. Like I said, the goal was to get to the 40.41, which they did. So you could have taken profit there when I said the target is 40.41. Bulls are trying to get to 40.4250 and 40.43. So 42.50, but they need to close this bar on its high, and then they're going to try to probably close the gap. Bears want to double top, okay, and come down. Now, we already breached the bar 2 high and a strong bull bar. That's a bull pressure. taking out the upper wick and entire body, not the entire body, but majority of the bar too, the body part of it. And then now we're taking out the high. So if they can close this bar 3 on its high, the targets as early as 42.50 for scalpers and 43.50. Okay, but the bulls are going to try to probably tag 40.45. Where I marked on the Globex is where gap is closed, and it's also a target. Okay, so there will be some profit taken there on the 15-minute chart. Last week's low, August low, last month's low, also target, but 52, I'm going to make that 75. 52.75 is target. So that is gap close, low of yesterday, close of yesterday, all magnets. Now, there will be some profit taking here. I said the target for scalpers was starting at as early as 42.50 and 43.50. Now, we tested 43.75. We tested one tick above. That means right there, scalping machines are taking profit, and I warned you about that. So if you bought this, you needed to take profit as late as 43.50. So, well, I do look at ATR, and that's why it's in front of me. It helps me to see how much the market can move up and down. It's all about your, risk tolerance, right? So I explained with bar 1 that that is a 16, 17 point bar. Hold on. I don't want to lie. Yeah, it's 16 and a half. That's already too risky. ATR is a lot less than that, but it's too much. It's more than 10. It's kind of out of my comfort zone. So to answer your question, when ATR is too high, and if it's the first 2 bars, I look around and see, if the second bar was bullish, I would have probably jumped in, and I would have grabbed and scalped half the ATR. Would have been a great move. But the bar 2 did not close bullish, and then I started to calculate, and that's when I started to tell you guys, I think we're going to scalp up here, and it may not go right away. So I did not, if I wasn't talking, I would have jumped in and taken profit at 43.50, maybe one tick below, 43.25, and be out of it. But because I'm talking and looking at a bunch of things, and I kind of stayed out of it. Okay. So if ATR is too high or the bars are too big, I tend to, I got to safeguard my funds, my account. That's my number one goal, right? It's not about opening trades. It's about safeguarding your funds, because without the funds, I cannot trade. So if the ATR comes down around 5.35, I mean, that's slow trading, but that's really good trading, low risk. I can actually enter the market with multiple contracts, right? I can take much better risk by increasing the contract size when the ATR is low. But the ATR is too high, I either can trade with micros or single contract. So, and that's always been my approach. Can we get a second leg up? We're at a pullback right now, so I'm going to see what the bulls are going to do here. No follow through for bar 1. Very weak follow through indeed. Some limit order buyers try to buy the bar 2 close, but look where the bar 3 closed. Okay, so bar 2 close yielded something, but it's just when a body closes like this, that's hesitation. It's a 3-bar limit order, maybe 3.5, I should say, because we're still overlapping with bar 1's high. But it's not that a strong limit order. From the lows, bulls are trying to get a high 1 signal bar and continue to go up. they're going to have to close a good bar here, good close, at least take out the midpoint of that wick and push this up further. That would be bullish pressure, and we would continue to go up to low of yesterday, close of yesterday. Right now, it's resistance. And you can see how bearish we are. 20 EMA is below 1 hour 20 EMA, okay? Price is below, so we are very bearish. Bears are having a hard time buying low. They want to sell the pullbacks. Bulls are buying, but there's no, strong strength bars other than bar 1. So it's a bit of a problem. So I'm okay to wait and see some strength here. So if we can close a bull bar above bar 1's high, we can continue to go up. But right now we're in a pullback. And remember, I said on the 15-minute chart, we have some kind of a bear flag formation with wedge bear flag 1, 2, 3 maybe. Okay. Hopefully you saw that when I was charting the Globex chart. And that's why we're having resistance. That's the third push, basically. So this is a pullback at the moment, but it's getting pretty strong. So now what can happen here? Well, we could come back down and make a double bottom and then start to go up. But I think we still have some room to sell. I would look for bulls maybe at the end of this hour, unless they want to show up now. So those who bought the bar 1, disappointed with bar 2, but they bought it anyway to break even. So say you bought here. So think about the psychology. Bar 2 is immediate sell, okay, sell the close. It just went up a little bit, but it's disappointment. So when you're disappointed, you have to buy again to break even. So they bought again, or bought the close, and then they broke even and even made some money, but no continuation, and the bull's not able to close that bar 3, strongly bullish, so it kept selling. But now what's happening with bar 4? Well, it's not getting any continuation either. Where's the sell to close bears? They're not there. So bars are betting against each other. Market is betting against each other. So there's confusion. Confusions mean trading range, and there's a tight trading range. That means it's a limit order. You sell above things, you buy below things until it breaks out. So let's take a look at some charts here while this is happening. Okay, so I'm looking at, if yesterday's price action of the sell climax, this is in front of you. You can get access to encyclopedia and study these. I do this regularly. It gives me an edge and sharpens my price action skills, because you have every scenario in front of it. Basically, these are actual RTA charts. Look what happened here. This isn't a strong gap down, but it is still a gap down. But look at the rejection here. And then we're stuck in this trading range for a while. So we'll start at the buy at the end of the first hour, maybe 2 hours, I don't know. I just have to count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we had a double top higher low, and then we bought a little bit, but you see the entire day ended up being in a trading range. Now look at this, right? It looks like us stuck in a trading range. So we could go up. You see that bar I was talking about, the bar 70? First, we need to get up here. Even if we go up further, sellers could be waiting there and we could sell. Now for bulls, okay, they made a wedge and failure, bear flag failure right here, and nice wedge bottom, and then we finally found support. But look at the quality of Friday's selling. we touched once. This isn't a touch. Bar 44 did not touch the EMA. Bar 48 touched. And after bar 48, I mean, look at this, right? All these bars, more than 20 bars, right? Nearly 40 bars. It's kept selling and selling and selling. So chances are we're not going to break out bullish. I'll keep my eye on it, but I doubt it. We're already struggling here. You could see when I said this is a tight trading range, sellers are above, they're going to put a limit order there. Buyers could be right down here, so we could still push down here somewhere between that wick and the open of bar 1. Buyers are waiting here. They're going to buy and they're going to scalp until they no longer can scalp. So what can you do? Well, you can buy a strong bear bar close and you can sell a strong, bull bar close. But you have to be very quick to get out. Remember, the traders' profit is only 1 point on S&P. Okay, machines are fine just scalping 1 point with multiple contracts. So don't expect, oh, let me linger in this and try to grab 3, 4, 5 points. That's not how it works. So you scalp a point, you bank that, and then you can leave a runner, but you got to keep your stop very tight if you don't want to give back all that, because it could turn on you any second. So bulls are trying to push towards 43 now, 40, 43 area. Still trading range, they're still trying to close this. If we do close this bar bullish in 4 minutes on the Globex, this is still the target. Okay, scalpers will take profit here, some, and then they're going to leave a runner because we can go up to 40.48 and 40.49. 40.48, you could look to maybe even a 1 tick below, try to take profit. We have a breakout bar, but it didn't close as a breakout bar just yet. There's still 3 minutes and 52 seconds. Bulls are trying to close this gap. They're trying to break out, but we met my target, and that's why we're briefly stalling here. We can keep going up to that area. In fact, this is the target. But they need to first close a bull bar above this line right here where it's marked, okay? 46.50. So if we do close a bull bar above a 46.50, we will continue to go up to possibly and test the 40.49. But this bar needs to close above where they just breached with that wick. And that could get us to the magnet. The EMA is magnet, low of yesterday, and the close of yesterday is magnet. Low of bar 76 is magnet. Okay? Okay? I use period 4 up to 6 on the ATR setup on the 5 minute only. Bulls are not that strong, as you can see. Now, bar 4 is basically high 1, okay, from the lows. But if you are buying above bar 4, you have to have a good reason, okay? Because it's a bear bar and you're trying to enter in a limit order market with a stop order market, meaning 1 tick above bar 4, you got filled, okay? But your continuation is rather bad, right? So, and that's because you are buying above a bear bar. And there wasn't enough space for the profit. I told you guys this arrow was right here, and I said that is the profit taken area. If you are buying into it, you have to take profit. And I also said I will buy into those targets and I will sell from those targets right before market opened. I did say that. So bulls could not push further up to 48, 49 area. And you kind of see it why. I don't have to repeat it. Okay, so, but if they do close a bull bar, then that's fine. But look at the daily bar. Okay, look how strong. We are still smack in the middle of two moving averages. Market has not yet decided. So, like I said, until 10:30, okay, we could, still could continue to come down. And you have to be prepared for that. I have yet to open a trade. I did not do anything, but I would have traded into those targets only because 15-minute bar closed bullish, okay? But still, that's the first breakout from this mess, this TR, okay, trading range. So it's probably going to pull back. It's better to buy the pullback than buy the close when you have a huge 15-minute bar doji. Upper wick is almost the size as the lower wick. It's confusion. So you cannot buy even the body is strong, a big, large doji bull bar. It will pull back first, just like we had right here, this 15-minute bar and that 15-minute bar. So you look for pullbacks, maybe somewhere around the 50%, put a buy order and scalp and leave a runner to see if it's going to go to your targets. Yes. Sometimes in the tight trading ranges, I exclude the wicks on the 5-minute chart. But for measured move targets, yes, I do. Now, for measured move targets on the 5-minute, if I see a bar with really large wick, I don't take the 100% wick length. I actually exclude 50% of it just to get a realistic target. I can always leave my runner to run to the actual measured move from when measured from the extremes. But I like to get conservative targets because I do want to pay myself ahead of everyone else, right? And then have a runner see if it's going to actually go to the actual targets. If it doesn't, that's fine. I can always get out of my, losing position for that runner. But I'm already paid, so I don't have to worry about it. So that's where the wicks come in. I don't have a good explanation here. Good demonstration here, but it's not it. If I come across, I'll point it out. Like for example, right here, right? So if you have like this bar, like big wicks like this going up, instead, okay, of taking that wick, maybe I can measure from half the wick or exclude the entire wick and get a conservative target, something like that. All right, so we're still in a trading range. Even though we went up, but look what happened. This is still trading range. This is bar 5 is a strong bull close. Machines are still, no, this is still a trading range. We're going to sell that. We're going to sell that. We're going to sell above the trading range, okay? So basically your trading range on 5-minute bar from there to there, there to there, okay? So we're still inside the trading range. So I'm going to take it like that. If you don't take the wicks into consideration. So it's a very tight range. We don't have a breakdown or break up yet with a body closing above 38.50 or below 28. So I'm just going to stay out of it. I have no rush to trade anything. There will be a good trading opportunity, a good setup coming up soon. I will wait for that because I only want to trade today once. It's Monday, and I'm looking for some kind of swing. I want to enter with maybe 2-3 contracts and take a couple of points, maybe 5 points scalp with 2 contracts and a lever runner. And that's what I want to do today. I've decided that's my trading plan, and I'm going to stick to it. It makes life easier, you know. It just takes the anxiety out. Can I trade this bar? What if I'm sitting out, I'm missing, I'm losing? No, don't look at it that way. Okay, so you're losing nothing. Just, it's okay to not trade. You know, it's just Monday. Just get a cup of coffee, watch the price action, you know, just conversate with people on Discord or the BTC forum. We have a website forum, by the way, guys. Those of you who just joined Discord and not aware, we have a whole lot of conversation going on brookstradingcourse.com. brookstradingcourse.com. We have a blog section, or any area, you'll see that we have a comment section under these posts that you can actually ask your questions, be part of it. You can take a look at the past conversations, chats. You can learn a lot on the brookstradingcourse.com. So be part of it. Same on the trade room. You are a trade room member. If you just joined, you know, we have the trade room website also has forums that you can go and check out people's responses and all that. Okay. Oh, and then, oh, yeah, I should also remind, we also have, if you have a course, Brooks Trading course, okay, you are a course member, or you have all the books, if you are a Facebook member, Facebook user, go look for L Brooks study group. We have an official study group that Emil Ustinov manages. That's his group. And answer a couple of questions before getting admitted. Prove that you have the course or the books and you have some understanding, and you can be part of that study group. I'm there. A ton of us is there. Richard is there. I mean, yeah, it's a good learning area. There are Forex traders there if you're trading Forex or any kind of futures, stocks. Brad is there. I think maybe even Ken is there. All right. So we have plenty of online properties that you could be part of the conversation and not feel left out. I'm still waiting. I'm sorry. I'm just talking, but it's just that the price action is not ideal for me to do anything. Now, we do have some kind of double bottom, and this is, what does this look like? I taught you guys on Friday. It is a variation of a bull flag, isn't it? So I'm looking for bulls to actually close a bull bar above the 38.50 to get a breakout, preliminary breakout at least. So I do have a bull, maybe a very weak spike, okay, and a double bottom, but still we're in this tight trading range. Until it breaks out from somewhere, I'm just not going to do anything. Bulls are still trying to break out, but bears are still trying to reverse this. Therefore, I'm just killing time. And it's okay, because it keeps me out of unnecessary trades that could turn on me. Now, bar 8 is an outside up bar. Okay, so bulls are trying to get this engulfing bar in a tight trading range. Okay, they're also trying to get a second entry long. Okay, so say buying above bar 4 was a first entry long, but look what just happened here. Okay, came down. So the trader's equation is a second entry. You know, if you want to buy this, now you're in a tight trading range, and bar 7 is yet another bear bar. Do you want to buy above it with a stop order in a limit order market? Bar 9 would be the result, okay? If it's too premature to buy, don't buy, all right? At least wait for bar 8 to close, okay, bullish, and close that bar above 38.50 and see if the bulls will bite. and then we can go right back up to the EMA, maybe close that, close that gap, but I don't see it yet. Now, if you bought here, you may want to say, hey, this is actually a great risk reward because the risk is so tiny. I could buy this close, put my stop literally 2 ticks underneath there or here, and then grab a point and then leave a runner all the way up here. That's actually ideal. I would love to get into, positions like that. Tiniest little, stop. I'm okay with that because I can afford losing that risk. Okay, I can afford losing that much ticks or points. That would fit my trading plan. So, but it has to be a second entry because second entry is going to get you a good run for your money. Okay, if it's not a second entry, it's going to struggle and most likely to hit your stop before going in the direction you were trying to trade. So always ask yourself, if I buy here, risk looks good, it's small, but is this the second entry? Well, we made a new high, okay? We made a new high, so maybe this is still the first entry, and that's why we're struggling to close a bull bar above 40.38.50. So if things don't look clear and you're doubting yourself and you cannot see the second entry, okay, long, clearly, just stay out of it. You'll get a ton of different second entries, okay, that are so much more qualified than right here. Because there's nothing worse than taking a trade and then sweating like crazy, okay? You do not want that. Or just grab a point and then leave a runner and then move that your risk or your stop right to your break even where you entered. So this way, as your runner is running, you have risk-free, okay, completely risk-free trading. Even if it comes down and hits your entry price, you lose nothing, absolutely nothing. That's the way you want to trade. Some people might argue, well, if I do that, I'm going to be kicked out. Its probability is higher for me to be kicked out of my position. You want to be kicked out of your position with a red P&L, or you want to be kicked out of your position and get back in right away with another bull close, but when you kicked out, you absolutely lost nothing. In fact, you might even gain a 1 tick. That's the way that I would like to be kicked out, and I don't mind getting kicked out that way 10 times a day. That would not make me a good swing trader, but that would make me a good scalper with basically no losses. I have this trading buddy. We used to argue a lot about that, and he used to say, he's no longer my trading buddy. That's why I'm talking past tense, because I had enough of his antics. We're still friends, but he never understood, why are you moving your stop so fast to your break even? Because I don't want to deal with, okay, in a tight trading range, reversing, and I already made money. I don't want to give it back. So that's okay. I can trade that way, as long as I don't lose. Because if I make money with my first scalp and then it comes down and my stop is still lingering here and I see it's coming and I don't touch it, I'm not only going to give back what I made earlier scalped, and I'm going to give back even more. Now I have to worry about how am I going to make that money. I don't want that kind of psychology. I don't always move my stop. For example, if I'm if I see a clear wedge, okay, if I see a clear wedge and I see an inside bar, okay, my stop is going to be either there or underneath that inside bar because I'm entering to swing. I can buy, scalp, okay. I know pretty much that this is going to come back down to make a double bottom. So I can actually move the stop, and because it can make a double bottom and go up, or it can break the low and then start to make another wedge down. I don't want to be stuck in that. So I can grab that 5 points and then move my stop, and if it kicks me out, that's fine. But if it makes a higher low and takes out that high, I'm entering again. This time my stop is here, and I'm probably not going to move until it makes another higher low because I'm now in a swing. But if I know that I'm entering in a low probability area, chances are it's going to come back and it's going to threaten my stop or break even stop or the entry price level. That's because I was impatient. I didn't wait for the higher low. I didn't wait for the second entry long. I was impatient. I just jumped in to hope to make that 3 to 5 points right away. So that's what I get for being impatient. Most likely my stop will be hit at the break even. And that will come to you with a bunch of exercises that you will be doing on sim or replay days. It's all experience. All right, so we have a second entry long. But it's still trading range. But 3 bull bars now, so the EMA is the target. For bulls, for scalpers, they want to test 43.50 and 44.50. Now, if they do close a bull bar here, chances are we're going to end up going up here on the Globex chart. Now, we might have a wedge here, 1 pullback, 2 pullback, 3. Okay. Maybe we would push a little bit, or we already made the wedge. But EMA is so close. Gap hasn't closed yet. Low of yesterday is gap close. Bears are trying to keep the gap open so they can sell, but the EMA is so very close. Can they close that 15-minute bar right here and then continue to go up to 56 or 55.75 area? We can also test 55, 40, 55, and sellers are probably there. But let's see if the bulls can push this further up. They're going to have to close a bull bar above 50.50, 40.50 and a half. If they do close a bull bar there, we will probably going to continue up a little bit. But they need to close this bar on its high above 1 tick above bar 6. That will give us some kind of measured move. But really, this area is target, or maybe 76 low if they can push this further. All right, so 6 low if they can push this further. All right, so I like to see a bull body close above, let's see, at least 47, 40, 47, then we would go up a little more. Okay, so we do have a bull close, so that should go up a little bit more. Now I like to see bulls to breach 50.50 and even 51.50 with a bull body and continue to go up. So let's see if there are buyers here. We can end up going up to, if bulls don't give up here at the EMA, I'd like to see continuation to 54, 55 area, 40, 54, 40, 55 area. They're taking profit here because they moved the market 20 points. So right here with the top of bar 10, they're just testing the 20-point zone and they're taking profit. I like to see a little bit more continuation up after this profit taken. So I like to see bulls to test this area right here. We have a bar closed where I was interested, which is above bar 6 high, bar 10 closed. So that's bullish pressure, and I like to see continuation Probably sellers at 40.55 or a couple of ticks under, waiting. This is my target because that's Asia 1-to-1 bull target breakout, which is 56. So I like to see bulls push this further up. That was a breakout pullback. If bulls close this bar, well, it's so new. I mean, it's only been 50 seconds into opening of bar 11. So hopefully they won't give up in here because we have a nice breakout. That's a pullback. We should get buyers here. Accelerate a little bit to the 55. So if you want to pay yourself around 40.55, I won't blame you because they're going to start scalping there. We just need to see bulls close this bar as a follow-through bull bar, and then we will go test the close of yesterday most likely. Okay, that's magnet. But really, I'm interested in sellers at 40.66 area, 65.66. Now before, and that's 20 points away, almost. Well, less than 20 points away, but I'm more interested in, for scalpers, 40.55. Okay, so if you are long here, you want to see this bar close as bull follow through bar 11. Okay, more it closes on its high, bulls could enter, but you don't want to see this strong bear close either. That would be a rejection and a 3 push top. So if that's what the struggle is, we're at the EMA, bulls are trying to close this gap, bears are trying to prevent that gap close. I just want to see bulls keep pushing this. They can just push all the way up to 40, 66, 67 area. Okay, here we go. So there's only 55 seconds left for bar to close, and bulls should push this at least to the 55, I mean, and not give in here. We have 2 bar bulls breakout from the high of bar 6. I just like to see a little bit more continuation before selling. So just waiting for last second what the bar is going to do and how it's going to close. If it closes even 1 tick bull body above the close of bar 10, that's bullish pressure. Most likely they will buy and continue to go up. But bulls will get serious if they can close a bar above, let's see, okay, so they couldn't close that bar the way I want it, but it's still good. It's okay. So I like to see a continuation to 55, maybe close this bar above 51.50. That would attract more bulls. If we get above 51.50 and close this bar bullish at and above 51.50, maybe 52, 40, 52, I'll just round it up, we would get continuation, but bears want to prevent that from happening. Now, I really wanted to see bulls close a second bull bar above 47.25, which is the high of bar 6. They couldn't get that, and that's the problem. See, that's the problem. And bears see this as a wedge at the EMA, and they want to sell it back down. But there's a breakout here, and we're in the pullback. So I want to give bulls a little bit more, okay, room here, and not just sell with such haste, okay, because we could still go up and close this gap, but no bull bar closing above this level right here. I want to see higher time frame Globex chart in 3 minutes, close a bull bar above this line, then we're going to go up here. We need that bull close where I'm just marked right there. If we do, the next target is, like I said, 56, 57 area. Bears are trying to get a first entry short. Technically they got it with the breach of bar 11 low, but if the bar closes bullish, no one's going to sell it. No one. Even if they actually sold, they will probably going to get out. So it's very critical here. I'm still pushing for bulls. So bull bias, would like to see bulls to push this further up to the 56, 57 area. Guys, please email support. I'm not support. I cannot solve your problems with the webcast while reading. There's an issue going on, but if you just scroll up a little bit, BPA can, or BPA, oh no, I forgot. Let me see where this. There's instructions here that you can follow. Just scroll up a little bit. BPA admin can look for the messages from that account. All right, so bears are trying to get that second entry. I'm sorry, that's actually the first entry, not even the second entry, from the highs, but I think it's a little bit difficult. Bulls still want to break out. They did a terrible job, but it's not the end of the world just yet. Okay, so look at the 15-minute Globex. We have a breakout. It's a weak breakout. Bears try to fade. Market tried to fade that, which they did, but they did not get bear continuation. Okay, so this bar was actually bearish, the prior 15-minute bar. I would have said this bar I'm talking about. If it was bearish, I would have said we're going to come down here, we're going to close, and we're going to start to swing. I don't see that, and that's why I'm bullish. So I want to see this 15-minute bar close above that line, continue to go up to 55, 75, 56 area. So just waiting. This is what you're seeing here on the 5-minute chart with bar 11 and bar 12 is a pullback from the 20-point scalping zone. Okay. If you measure from bar 8 low, because if you measure from here to here, you could see how much the bears sold, more than 10, 15 points. So you have to find, you cannot measure from here, you have to measure from here. The next bull move started there, and they ended up making 20 points scalp. Okay, so that's why they're taking profit here, as you can see. That's a good sell. So you would consider that as a wedge sell. That's the first sell, but we're selling into that prior trading range high. So we now have a different trading range, right? So that's the new trading range high. So basically we sold 50% into it, almost. That's a good breakout bear bar 12, strong. Bear's probably going to want to get some kind of continuation into, I'm guessing 37.25 or 36.50, but I'm going to wait for this bar to at least trade 2 minutes and then see what it does the last half and see if it wants to come down and test the 37.50 or 36.50. So I'm not selling because you're still in a trading range. And bulls did a horrible job breaking out. It was a good, just a one tick body breakout, but they got no continuation with bar 11, and that's a problem. And look what just happened. Market is still fading those highs. So, but no bear bars. So where are the bear bars? Are they still trying to close above this line? Looks like it. If they're fading but not able to get down to certain levels and close a bear bar on the higher time frame, I'm not in a rush to sell anything, especially if the 5-minute bar like 12 gets zero continuation after that, meaning you want to see a bar 13, a bear bar. That's a problem. Okay, I cannot sell something that it doesn't want to sell. Plus, it broke out here. Look at bar 9, bullish pressure. Look at bar 10, breakout. So you know limit order buyers are waiting there. Limit order buyers are waiting there. Limit order buyers waiting. You know, this area is a limit order buy. So it's, it's also, look how much the bears sold. 5-point scalp. So that's, they started to take profit. If there's no in the order flow, sell orders, you get no continuation. And that was right there. I warned you, this is a wedge, okay? Bears are trying to get that first sell and trying to make that 5-point scalp. which they did. So if they cannot sell the last, okay, so we just entered the last half of this bar, okay, bar 13's lifespan. So if they do close it last second, bearish, and that bullishness goes away, then yes, they're going to try to sell into 37.50 and 36.50. If they do close it bearish, they're definitely going to test 36.50. All right, so they're testing 36.50. They just tested it. So that is becoming now a little more bearish. But again, this is right here. You're at the apex, okay? Bears are trying to come down to here, possibly, to test the low of this trading range and break down. Back into the trading range, we had a wedge at the EMA. Can the market sell all the way down here? They could. They could have come all the way down to the bar 1 low and test it, maybe even come further down. But let's see. Right now, bears are trying to get that 15 point, which is right there. But if you're measuring from here, this is where I measure, they're trying to get to the 20 point. 20 point is right there. Okay, so they're trying to reach this area. So they could continue to sell into 31.50, possibly 30.50. There will be profit taking there. All right, let's see what they can do. Could we bounce there? We'll look support. But really, the 28 is where they're trying to test. So we should bounce here a little bit because that's profit taking at the 20 point, like I marked it. There is the trading range low right there. I'd like to see a bounce, but if they want to sell this, nothing we can do. Bears want to come down and test this low. They want to test the 40.25.75, which is the midnight open. But I'd like to see a tad little bounce, perhaps, and sell the pullback. 4 bear bars is a trading range. We just tested this trading range low. Bears are trying to break out from there. I'd like to see a little bit more bounce here. There could be profit taking. Maybe weak, but bears are trying to swing this down now because they completely failed here. Bulls are failed here. Failed to close a bull bar above it. So it's going to continue down to the 25, possibly. 40.25. But they need to close that body below the 40.28 to keep selling and get a breakout. Okay, so it is bouncing because it overshot the 20-point zone. It's taking profit, but it's not reversing, obviously. Not yet. It's going to probably bounce a little bit more. Sellers could be a couple of points above, or they're just going to keep selling into the 25. All right, so they're testing the 25 for continuation. Good continuation for bears. They're trying to come down and test the bar 1 low. Good continuation for bears. They're trying to come down and test the bar 1 low. But I like to see a pullback a little bit. Could be too low to sell, maybe a pullback and then sell. But I like to see a pullback a little bit. Could be too low to sell, maybe a pullback and then sell. So if you sold it, you might want to pay yourself a little bit because it can pull back. So if you sold it, you might want to pay yourself a little bit because it can pull back. ATR is 8 1/4. So it can actually pull back 8 points. All right, so let's see. There will be sellers wanting to sell the pullback, but it's also a trading range. Okay, so adjust it. This is still a trading range, guys. Okay, so we're testing the lows. Some buyers at the lows. Still a trading range, guys. Okay, so we're testing the lows. Some buyers at the lows. You don't really need this. Take that out. Expanding triangle also. Okay, so expanding triangles are trading ranges. Sellers can be waiting as early as 32.25 because bar 14 break, that's the breakout point. So there could be sellers, so we could still pull back to the 32.25, or we're going to keep selling. We're going to keep selling into the bar 1 low. They're coming down to... Are there still people here having a hard time with the webinar? I mean, I can just stop here and take a break and restart the webinar. Okay, all right, so let's do that then. There's, okay, still people having issues. Can you guys give me a second? I have no lagging on my end. Everything's going just fine. Okay, so I'm going to close this now. Okay, I'm ending the webinar, and then and I'll get back in. Okay, so let me end this. All right, can you guys now see my mouse, and is everything back to normal? All right, can you guys now see my mouse, and is everything back to normal? Okay, good. All right, so we're back in the trading range. Bears still want to test the bar 1 low. $50-day moving average is still target. Bears are still pushing. Bar 1 low is still target. They want to get a measured move down, but they need to close. They failed here. They started to fade the highs right there. So no bull close. I explained to you guys, no bull close above this line. We're never going to go up there. So they tried with this 15-minute, but now they're pushing towards the 40.19. If they do close a bear bar there, we do have, okay, possibly we could end up coming down there as well. Take this. I'm trying to connect those lows on the Globex. So bears are trying to come down to the 40.19. Bar 1 is right there, just about to test the low. All right, so we're testing bar 1 low. Bears are trying to get a measured move down. If you have the Globex chart in front of you, even though you cannot see it, we just tested the 40.19. We're trying to come down to the expanding triangle trend line. We could push this all the way to, but really the target is on the daily chart, okay? I said we're smack in the middle of the 100-day moving average and a 50-day moving average. 40.07 or 40.08 or 40.0750 is where the bears are trying to push this further down. But just like any trading range, there are buyers there. So let me show you something. Let's see. Okay, so we could keep selling this a little bit before we reverse back up. Okay, so bears did a good job. That's their second leg down, but we're separating from the EMA quite a bit. So just like any trading range lows, there are buyers underneath. Now, I actually want to show you something else. So let me go back to, okay. So we have a gap down, all right, and we had a wedge top to the EMA, and we could not get above the EMA. So we have a nice reversal, 3-bar reversal, and we kept selling. We might push a little bit, but we could also go right back up, okay? So there's that. Could that be a double bottom? Possible. Or can we keep selling and selling and selling? Well, this is the wedge top near EMA. Well, we do have that. So we could actually end up getting a measured move target, but bears need to keep closing bear bars. We have a breakout bar, bar 17. Now, if you're expecting any bearishness and you're expecting some kind of measured move down, okay, for bears, you have to make sure that this bar breaks the low of bar 17, okay, which is bar 18, breaks the low of 17, gaps down, that will become a continuation follow-through bear bar after the breakout, bar 17, and that would be 18 bar, okay, breakout and continuation. But anytime around bar 16, 17, 18, we could also get a reversal, okay, so remember that. So it's very critical here. So if you sold this, you needed to take profit, okay, somewhere down at the low of bar 1. We don't have a strong rally, okay, at the open. It's a trading range and a breakout. It's a bull flag, okay, it was a bull flag, and bulls got their target met. Now, can this be a swing? Well, this is not a major reversal, but it is kind of, you know, two-legged reversal, but kind of they faded and it failed. Look at bar 10, breakout, but it just fails. Can this be now a major swing? Well, we do have a pullback and the bears are trying to sell. This bar 18 is everything. So I'm waiting to see how that bar 18 is going to close. If it closes bearish, it is possible that we could continue to sell this. But if it closes failed breakout, then we could go back up again. So it's trying to decide here. Some bears are going to sell and they're going to try to scalp here, but I'm waiting for this bar to close. I'm not going to jump in while it's still progressing because it is kind of a buy zone to me, being the trading range lows. So if they do close a strong bull bar, I'm not interested selling. But some scalper machines will sell here in hopes of getting 4 to 8 points scalp to the downside, Yes, if you have any support issue, please move it to the support room. There's a support room, everyone, on site. Yes, if you have any support issue, please move it to the support room. There's a support room, everyone. Bears need that continuation bar with bar 18 to get that measured move target, or at least the start of a measured move. Now, I do have a trend line right down here, and we are bearish. So they're probably going to try to sell this. But it's a bad, I mean, it's continuation still, but it's really not there, you know? I mean, look at the way the 18 closed. It did breach below 17, but it's just a really, I'm going to wait a little bit here, so. Can it still sell? Yes, because if it's too low, bears need a pullback, okay? Now, bulls are trying to get back in because they see some kind of wedge down, okay, up, down, but I think it might get a little bit more. Machines buying underneath bar 1, making money. I didn't like the way the bar 18 closed, so I didn't sell it. Like I said, they're always buyers underneath bar 1. It's a trading range, so they're trying to buy and make money. Bears should have done a much better job with bar 18. So bar 18 now becoming reversal. I'm going to wait to see what the bulls are going to do with the 50% pullback, so you can actually measure and see where it's going. See that 33%? As it gets closer, slows down because it's a good retracement. Now, if they do close a bull bar, 50% of this entire range is the pullback. So to me, this is failed breakout due to being a trading range and the buyers waiting underneath. So I really was expecting this kind of, or I wanted to see, not expecting, but I wanted to see for any kind of measured move down, this is what I wanted to see. Okay, gap down. And I wanted to see a really strong breakdown of this bar 1 low. Do you see it? No. It's literally a 1 or 2 tick, maybe 1 tick breakdown and a failed continuation. So that makes it very tough for bears. All right, so I'm going to be patient here. That's a good close, bar 19. But we're back in a smaller trading range now, right here, and that is the 33% pullback. Can the bears sell here? I think my data connection just stopped now. I don't know what's going on. Now I'm in trouble. Okay, hang on a minute, everyone. Let's see if I can fix this. Bears are trying to sell the pullback. Just establishing my connection. Wow, today is one of those Mondays. Everything's going wrong. My data connection stopped. Okay, let me try something else. My data connection stopped. Okay, let me try something else. Bar 20 is basically trying to sell the pullback, and it could. Okay, I'm having a hard time now. My Ninja, I have a data connection, but the chart is not it completely froze. So let me try something else. This is getting ridiculous. Okay, let me get rid of that. Today is I don't know what's going on today. I guess it's Monday. Nope, it's definitely the application, I think. But just give it a second. Hold on. Okay, so it's better. Let's go on this. All right, so we have a pullback now. I did not buy that bar 19. I did not want to buy against this two-legged move down because it's also a trading range high here. Makes it very difficult. And it's also double top. So now, can we get another opportunity to sell this? It is possible. We could still get some kind of trading measured move either from there. I'm going to take this instead. But bears need to break out here. So they're trying to break down. If they want to continue to sell, I need to see bear bars breaking below bar 18. You can count as first, you could say first entry, second entry, but the second entry failed here. Now, bulls are trying to get a first entry and a second entry long. Can this be low 1, low 2? They are trying to get that, but that bar, technically it is, but it needs to close. See, it didn't close bearish enough. So you're in a limit order market now. Bears are really having a hard time breaking this down, okay? I got out. I'm done here because there's no breakout, and I kind of expected buyers to show up, and they did. But no continuation. Double top, okay, with bar, what is it? Bar 17 high. So it's a bit of a difficulty here. And then look at the bear bar, right? So that bar 20 is just not a good bear bar. So if bulls want to show up, they have to show that they're in the market. That means they have to show us a second entry long, which I don't see it yet. They're trying to get some kind of bear flag underneath EMA, but they need to break that bar 18 low and then start that measured move down. You're in a limit order market, so I am going to wait. This was a good sell, but it was a good buy, but they couldn't, get above that level that I hoped for bulls to get above and then close this gap. As long as the gap is open and you get this bar 12, I wanted this bar 12 to be small and buyers to show up there, but no bodies are closing above EMA. We're still always in short. And then you get this bar 12, that's where I kind of gave up and I was done because the Globex chart also showed me that it was completely failing. Okay, so tight trading range, no breakout for bears. It's also triangle. Okay, it will break out eventually. Just need to be patient. Sometime around 11:30, we should get some kind of, possibly we could get that reversal. because we did have continuation. We could get that reversal finally. So I'm just going to wait. We're stuck in this. I just don't like the way it is. Now, can I sell this? It could sell, but I need the bars to show me that. So I don't see it yet. Because bears had all the chance in the world to sell this strongly several times, and they failed. So for bulls, it's basically two-legged move possibly to the EMA. But again, I need to see the second entry long. One tick above 18 is the first entry, and they're trying to get the second entry. Technically, they got it above 21, but 21 is a bear bar in a tight trading range. So similar situation of what we had here, the bulls could not get a good breakout. I need strong bull bars, and I need about 2-3 bull bars stacking in order to believe that we're going to get above the EMA and we're going to finally become always in long, but I don't see it yet. Now, can you buy here and put a stop underneath 18 and go long and assume that we're going to go test the trading range highs? Well, if you do that, we don't have yet bulls taking out those highs. It's possible that they could come in and take out your stop. And then we could end up getting a 3 push down before actually reversing back up. So it's in the middle of the road trying to make a decision here. So I would, if you're going to go long, wait for this bar to close bullish. If you're going to go short, you still have to wait for this bar. Now, can you actually sell and put a stop somewhere here or above bar 16? It's still not clear. We had the continuation. So we're now going sideways, and the bulls might turn this around and make this a small pullback bull trend to go up, okay? And in fact, we could end up going up to here. So I need to wait. Because if bears do sell this and the bulls totally fail here, we could quickly pull down to 40, 10, 40, 07. Remember, I don't have the daily chart here, but if you look at your daily chart, take a look at that 50 SMA on that daily chart. I said 40.07 is the 50 SMA that we could still pull back to it. Eventually, I'm going to switch back to my original workspace. Okay, so that is a very weak second entry, but it is technically a second entry, but it's just very, very weak, and it's a TR, so I did not buy it. There's a trading range highs here, okay. Bears sold already with limit orders, then the bulls bought with limit orders. So bulls are trying to break out and get to the EMA and start some kind of small pullback bull trend. Okay, so that's the second entry. They're trying to get to the EMA. EMA is still the target, but there's that bears want a double top, but they should be able to get to the EMA. Just watch out with bar 16 high. We're about to test it. We just tested it. EMA is so close and bull bars are nice, but there's still resistance here. Remember I said earlier, this is a trading range. So what you would do is you would measure your trading range, okay? And I said, we're probably going to try to get to the 50% or the 50% pullback, okay? So I don't know if you guys remember that, but I did say that we're probably going to try to get to the 50%. We tested the 33. If we do get above 33, we need to close a bar. I mean, we've gotten so close to the 50%. And that's the second leg, or 10 bars and 2 legs to the EMA. But generally when I'm trading a bearish move down and I have a trading range, and if the bars are going and testing that 50%, I kind of look for a rejection there, okay, at the 50. So that's what we're having right now, okay? I like to see bulls push this up to the 50 and test the 50%. EMA is right there. All right, so but this is not always in long bulls. However, look at bar 19, didn't get continuation. So if there were 2 bull bars and then a second leg with 22 and 23, I would have said we have a better chance of becoming always in long. But this is what you're seeing also here, is that the bulls are trying to reverse this with a small pullback bull trend. I need to see bull bars closing above EMA. Now 50% is still the target. You may want to pay yourself there that we could get rejection there, because this is a sell zone now, okay? Look at the breakout. We could still come down because this is a sell zone now, okay? Look at the breakout. We could still come down. This is the second leg to a key price, which is EMA. Some machines already took profit there, and there are always sellers waiting, sell orders waiting at the EMA wanting to sell. So you should have paid yourself there. Now, can we keep going up? Well, bulls need to show us consecutive bars above EMA to become bullish. Then we would go and test the highs again. Okay, so I'm going to get rid of that now. Good second entry, but not that strong, because you're going against a strong 2-legged bear move down in a trading range. So I don't like to force the trades. Key price levels are important to me. If I'm long, you know, I'm long because of bear pressure not being there and not being able to break out and get that measured move target, okay, measured move to downside. So if I'm buying, I have a reason to buy, but it's because I'm buying into a weak bear pressure, but I don't have a good bull pressure either. So I have to take profit somewhere. And that somewhere is possibly 10 legs and 10 bars and 2 legs to the EMA. Is whatever, you know there are machines waiting to sell the EMA. So, or the 50% of any kind of qualifying trading range, which I pointed out, or just a pullback, 33% pullback, 50%, maybe 66% pullback. So 66 is 39, 40, 39. Can we continue to go up? Well, let's wait for this bar to close. Bulls haven't entered the market heavily yet. They're testing the waters at the moment. We will know if they start to close bull bars above the EMA, strong bull bodies, okay, consecutive bull bars. We now have 2 consecutive bull bars since bar 10. Okay, this is the first time bulls are able to print 2 consecutive bull bars. But you're trying to buy under the EMA with no good bull pressure. So you have to ask yourself, what if this dies? What would I do? Well, you're going to wait for bears to actually start printing consecutive bear bars, taking out the lows, right? So this is first entry bears. if you do see another bear bar closing like that, that's a second entry short that the bears are trying to get, okay? And can this be a wedge? If you're counting maybe 1, 2, and 3, possible. So if the bar 25 closes low and a strong bear bar, chances are they're gonna come down here. But you just got to wait. You have to wait for bars to set up right there. Okay, so, and what happens if bar 25 ends up being a bull bar? Well, that could still go up and test the high of 24 and give us a micro double top, and that could still sell. Or the bears are looking for first, second, and a third push done by the bulls so that they can sell it down from the high or at the top of 24 area, bar 24 high area. So I'm going to wait. I need this bar to close bearish for me to sell with a second entry short. Otherwise, I'm not going to touch it because bulls are looking for possible wedge top. If this isn't a good wedge top, which is not, because this is still coming down, so I would count from here. First leg, pull back. Second leg, pull back. We might be looking for a third push up. It's very hesitant. You see what's going on there? I still have to wait for bar 25. There's still 2 minutes. I mean, bears can get stuck there, and I don't want to get stuck. Like I said, I won't be opening trades while the bars are forming because there's that trapping can happen. Bulls are trying to trap the bears underneath 24. Bears are trying to get a second entry short. Nothing is certain yet, okay? So I have to be patient. Okay, see how the bears just got trapped there? This is why I didn't sell right away. Bulls are trying to close a bar. That's an outside up bar. So can they continue to go up to 40.36? Now you understood my reasoning right there. 1 pullback, 2 pullback, they're now making the third push. Or you could say, again, I'm showing you so many different ways. If you measure, I said we're probably going to get to the 50, and if we do close above 50, 66% pullback is next. So when everything's coming together, I can structure a trade and saying that this is totally going to be a trap for bears because I did not want to sell it because I didn't see a second bear bar setting up that second entry short. So now we have the first bull close, okay, above the EMA. That's good, but it's not that strong. But the bar is very strong. But this is also wedge at the EMA, yet another wedge. So I'm going to wait. If we get a second bar closing, okay, bullish, that means we might be actually in a small pullback bull trend finally. Pullbacks would be 1 or 2 bars and weak, right? So look at the 2 bars, but weak selling. 1 bar, 1 bear bar, bar 24, and the buyers were underneath and they bought and they broke out. So that's the third push. So now if we get another bull bar closing, possibly taking out the high of bar 25, we could say, okay, we just started to become always in long bulls. But let's just wait because bears want a double top and still they want to go test the 66 and then come back down from there. You also have to think of the psychology, right? I keep going through this almost every session. You're selling here. and you're stuck. You've gotten some kind of continuation, but I said when the bar 18 happened, be careful, this could be a reversal. And the bar 18, it does not look good because it's not a good continuation follow-through bar. So you're stuck there if you sold it. But market gave you an opportunity. There's a small trading range, and the limit order sellers are there. If you sold somewhere there, you know those bears who are stuck, they're going to try to break even there. And that's why the bar 20 and 21 are so weak. There's a reason why they're weak, because they are breaking, they're trapping out of their cells, okay? They're bad cells. They got stuck there. Once they get out, you end up getting these bull legs or bull bars, okay? So now bulls are trying to close, okay, bullish. The goal is to get up to the highs. I'll tell you right now if this continues. I need, this is going to pull back eventually a little bit. Bulls need to close this as bullish as possible. And the next bar could be a quick pullback only to buy again. Okay, so you also have a head and shoulders pattern, right? So you see it, right? And this is the higher low and swing. It's good for the bulls, but it will not be good for the bulls if this bar fails to close with a good, strong bull body. It will be the second bull bar, even though if it closes with a weak bull body, that's still always in long, but you want to see the bar close on its high and strongly bullish. Then you can buy the pullback. You do not want to see this bar closing bearish. If it does, that's a fail. Now, why is it a fail? Well, again, you know, when in doubt, just measure it. Measure your trading range. This is your trading range. Remember, when you divide the trading range into 3 sections, okay, into three sections, what do you see, right? Remember what L does, right? What he taught you guys. When the trading range is divided into 3 sections, this is a sell zone. This is a buy zone. Do nothing in the middle. So you wait for bulls to get up there, you can sell. You wait for bears to get down here, you can buy. Look what they have been doing. Selling, buying, buying, selling, do nothing, goes up, sells, comes down, buys, right? So basically this is 0, 100, 66, okay, somewhere here, that's 50, and this is 33. Or if you're counting from here, 0, 33, 66, 100. That's all. So you're basically trading from these levels. That's all you're doing. So you can look for a second entry buy down here. You can look for a second entry sell up here. So this is a Fibonacci template that I created to give me, you know, when I'm stuck and not seeing what I'm supposed to be seeing, or, you know, it's nothing clear. It's because it's the trading range. And that means I can actually now have some kind of boundaries, okay? 3 different trading ranges with midpoints are highlighted. So if the bears start to actually print bear bars underneath the midpoint of these trading ranges, they can sell into the boundary lines right there. So I'm watching now, right? So but if they cannot, then they're going to keep going up and test this boundary line again, maybe close a bull bar, go and test that one and test that one. So right now they're taking profit because they tested that 66% pullback. So let's take a look at this scenario one more time, right? So you have gap down and you have a double bottom. So let me get this out of, get rid of it. What just happened? Hang on. Here we go. Okay, so we have a gap down, we have wedge top at the EMA and a double bottom. Wedge top at the EMA, wedge top at the EMA and a double bottom, failure to sell. Now, we don't have a strong, couple of bull bars, but look what happened here. Similar thing is happening, okay? So we're coming down. So what happened to the always in long bulls? Well, that's not a second consecutive bull bar above the EMA, is it? So it's not. So I cannot say that this is becoming always in long bulls. Now, can it be still small pullback bull trend? Yes, it can be. Okay, it still can be. But what the bulls are having right now is 1 pullback, 2 pullback, 3 pullback, wedge push top, and the bears are trying to sell underneath that, okay, double top neckline. They're trying to get a 3 to 5 point scalp underneath bar 26. Okay, now I'm going to wait to see where this bar is going to close. So if you actually measure, okay, so they're trying to get a 3 point, they already got the 3 point, they're trying to get the 5 point scalp. See that right there? When you have a wedge, you have literally, 3 to 5 point initial grab, or just say 4 points, right? So they already got 4 points right there. If you sell 1 tick underneath that bar, if it's a good sell signal bar, it's okay, nothing major, but it's still a failed bull breakout and failed always in long, and it's a wedge, so they're going to sell. Right, so it's like this. Right, same thing. So basically, this is where they're trying to come down to. Actually, right there. So can the bears actually sell this all the way to here? They could sell all the way to here and grab a 10 point. Would that line up well? Well, let's see. 31, okay. That's a 7 point. 10 point is down here, a little bit under. So they can still continue to sell this. But the first they need to get that 5 point. I'm marking this so you have some sort of visual, okay, reference that, because you're gonna use this. This setup is perfect. If you have nothing, no knowledge, no skills, focus on the wedges, okay? You will always find good entries. Bulls failed, bulls only be able to do a good 3 push wedge. Look at that 5 point right there. That's a 5 point scalp with bar 27. Look at that. Right? So it even came down a little bit down, I think. Let me see. Nope, it's exactly 5 point. 1 tick underneath bar 26. Can they continue to come down to the 10 point area? They can. But they need to stop taking profit and they need to push with a second leg down. And I just marked it. And for those of you who are used to my Wolfie waves are like the wedges basically. I use the Wolfie wave technique to find solid targets. That's the target, okay? If you're not counting with 5, 10 point scalp. And that's the solid target, 40-24, and an extension all the way down here. But first you need to wait for these 5 point profit takers to get out of the way. You'll know if it fails, right? So basically, as the bar 28 takes profit, it goes up, right? But once the profit takers exit out of the market, if there are still sell orders, which there is, it's going to continue down to the 40-24 now. Let's see. Let's see if I'm right. And if this bar 28 closes bearish, that's a continuation for bar 27, and that's good for the bears. But the limit order buyers are waiting right here. So I'm looking to see if it's going to continue down. So, and get maybe a 10 point here. This bar 27 is too big of a bear bar to still count this as a small pullback bull trend. Bar 27 is not a small pullback bear bar. So it's quite large. That bar bar 28 needs to close bearish in order for us to continue to sell. So if you actually sold and took profit at 5 point, it's okay reason to go flat. And that's what I do generally. Okay, so I don't just, take profit and then wait for this to continue, because it's such a micro, wedge to me. It may not continue, but if it closes bearish, it will continue. So I don't generally sit there and wait for these pullbacks while I'm still in the trade. I just take the 5 point and I walk away. And if it's going to close bearish and continue to come down, because it could continue to come down to 15 point, 20 point, it could still sell, but I need to see that confirmation first. Yes, I open trades a lot, but I'm sure that way. We have a trading range. I kind of showed you guys that trading range at the beginning of the session. Can you say that we're still in a small pullback bull trend? Well, look at now bar 28. So I'm glad I got out of my 5 point scalp. I really want the bears to come down here and finish the job, but listen, market will do whatever it wants to do. So now, if the bar 28 closes strongly bullish, then we're back into small pullback bull trend. This will be no longer my, target or expectation. So that means I'm going to go back to the old sentiment, small pullback bull trend. You have an outside up bar 28. Now the bulls are still trying to push this, but it's a limit order market, trading range, right? So now you want to see, if you want to continue, if you want to see bullishness to the upside, maybe a double top with the bar 26 high, but there's a room. You want to see this as a bull bar, continuation for this bar 28. So is this now, how do I count this? Well, from the lows, this is the first entry long, second entry long, third entry long. Okay, we're still not making new lows, so this is the fourth entry long, but it's a tight trading range. Bars are overlapping. So would you buy above a bar 27? I expected bearishness, so I would definitely buy one tick above 28, not 27. Market is trying to push, but they need to have a bull bar. They need to have a bull bar closing on its high for continuation. And then we would probably test the bar 26 high, but there's a potential double top there. So I'd like to see bull bars actually closing, and I'll tell you right now, 38.75. If I get two bull bars closing above 38.75 or 39, okay, we have a potential to go up and test the bar 26 high, maybe even push towards 42, 43 area. So bulls need to show us that they can get a follow-through bar here to continue this rather, it's the early stages of small pullback bull trend. Okay, so I want to see bulls keep pushing this. Bar 26 high is target and a little bit above if they can. $38.75 is target for scalpers. Bulls want a double top and they want to swing down. I'm sorry, bears want a double top and swing down, but we've got a really nice outside up bar, so it should push at least to the top of that 26. Some scalpers are at 38.75. They're going to want to see a bar closing at or above 39, 40.39, and another bar bullish to keep going up. So still no Is this always in long? Well, we do now have two bull bars closed above EMA, but they're not consecutive bars, so it's not that strong. But look at the rejection, okay? So there's some kind of a bull flag there. There was a bull flag here. There was a small bull flag here. Bulls need to really keep pushing this. The criteria is 40.39. They need to close a bull bar above it in order to continue up. Otherwise, it could still fail. Could still fail. And if they do have two bull closes above 39, then they can actually continue to push up to 42.75, 43 area. I don't have the criteria yet. I don't have bulls doing what they're supposed to do. Okay, that's good. There you go. So they're trying to close a bull bar now, and they're trying to continue to go up, but I don't have the bull bar yet. I need the bull bar at 39 and above, and then have a new one and keep going up, and we could end up going to 40, 43, including 40, 45 area. So bears failed again. Look at that bar, 27, right? So, well, if you don't get a continuation for a bar like 27, you know, what's the next? They're betting against, okay, in a trading range, in a bigger trading range, against the bear bars. Market is betting against the bear bars. And then you get this, again, another trap, and that's a high 4. Again, those of you counting, right? So we have wedge, double bottom, whatever. So here is the high 1. Here is high 2. I would call that high 3 because we made a new low. And then that's my high 4. Now, where's the high 5? That's today's joke. So I'll have a high 5 if we actually get to the target. And the first target is the high of 26, like I said. Come on, bulls. Hey, guys. I'm very sorry about this issue. So I'm going to stay a little bit longer, okay, just to compensate some of the lost time. So I'll just stay another 15 minutes. If you want to stick around. As we get closer to a possible double top, you know, why would there be a double top? Well, think about it, right? We have a wedge. We have a nice pullback. Bears fail to sell that. Where is the second sell? Now, second sell come in with that double top. That's why I've been pointing out that double top is important if they can get it. Because reversals will generally happen. You want to sell the second entry. If that's the first entry, right, because you got a bear bar, right, breaking that trend line, you want to sell the second entry. So if you put a trend line, that's the first bear bar selling and breaking that trend line. You want to see a second entry. Now, you do not want to see that high breached, okay? You want to see a lower high double top and another bear bar to get that second entry to sell. That's a better sell. So until you get that, you do nothing. You don't just assume, oh, yeah, that's a double top, let's just sell. If you do that, then you're going to be stuck because this could just break out and it could go right up there and test it. Remember, this is the trading range. So if I actually, again, do the exercise, like after the session, create your trading range. Okay, so what was that? That was the 3 sections that I created. So if you actually divide your trading range into 3 sections, what are you looking for? You're looking for bull bars stay above these mid sections for each 1, 2, and 3 trading ranges stacked. You want to see bull bars. They're going to test that boundary line. If they do close a bull bar above that boundary line, where do you think they're going to go? They're going to go up to here. But first, they need to close it. When they get there, there will be profit takers waiting because if there's a possible double top potential there, you know, they want to sell it. And not only it's a potential double top, it's also the boundary line. So that's why this bar is stalling there, okay? Because bears are preventing or trying to prevent a bull bar closing above inside this zone. So they will do everything to prevent it. But look what happened here. Like they prevented it. It came down, right? But look, they could not prevent it. It ended up going up here. Because it closed above that midpoint, it ended up testing it there. Look, they prevented it, but it broke out and ended up coming from there. So now they could not prevent it. What happened? Bar 30 closed above that boundary line. Where do you think it's going? Would you sell this? It's trying to go up here, okay? We have a breakout. It's coming down to test it. So if I'm still long, I would probably still be staying in my long because of bar 30. I will not be exiting out of my long because there's a potential of going and testing this line. Unless bears actually close this bar down here, then I'm out. I'm out because then we can quickly come down to here. But look at that, 4 bars, it's spike. Or you could say, well, this is not really the spike, okay? Is this a spike in channel? I don't know. I don't think so. This is just a trading range. So I would assume we're going to go up to whatever this is, 45. Unless this bar closes bearish, then I'm out because we could still get 4 pushes and then I would look for a bear bar to sell. I don't have a bear bar. I don't have, you know, a sell entry. So bulls are still pushing this here to that midpoint. But they will take profit right there at the 44.75, 45. So, okay, so you would do the same. You better take profit right there, 44.75, maybe 1 tick below. I wouldn't do 1 tick below. We're probably going to test the 45. So, now this is also cup. It's because, why is it a cup? It's because it's an inverse head and shoulders with a pullback handle, and it's trying to break out. Not a good double top there. It's trying to break out within the trading range, so I would take profit here. It's gotten 1 tick close, I think. Although, nope, 2 ticks. So it's probably going to close on it, but let's see. I like to take profit 1 tick, front running to the target. So this hasn't even come 1 tick close. It's been only 2 ticks. So it's probably going to push. There you have it. So we just met the target. Well, thank you, Emil. Well, I'm glad. I know you love to trade DAX. You're so good at it. I mean, you don't even need my help, but you know, I'm glad to hear it. I'm glad to be helpful. All right, so we're overshooting because ATR is 7.5. Now, what's this? Well, they need to close a bull bar, but I wouldn't count on it because they're going to take profit here. Remember, you're in the sell zone now. Okay? Bears like to sell up here. Bulls like to buy down here. Right? So, look, it came back down, filled the buy orders, and then goes up. You needed to take profit here. I don't care what you do. I don't care how much it overshoots. You needed to take profit there. Now, if they do close this bar above where I'm pointing, okay, chances are we're going to go up to that boundary line, which is the high of bar 11. Now, I also want to show you guys some, before I leave, okay, some like a buy temp, setups. Like if market is at the open, say like this, it goes for a while in a trading range. Straight line means trading range. If I want to sell this, okay, I would look for a breakout. Okay, then I would look for sell like that. and I would try to sell further. Okay. Now, if the market is coming down like this, right? So this would be what I'm looking for. If I want to buy, right? If the market maybe, bullish, and I have a straight, right? So it comes down like this, then I would look like that, a move up, come back down, and then buy again. This is what I would look for. Now, we're not very bullish, we're actually bearish. Okay, so they went up and then they sold it. See, straight goes up, traps the bulls, sells with 2 legs, right? So now it goes right back to there, to that straight area, which is trading range, and tries to sell. Now they're buying. But it's a trading range. We close the bar above that midpoint. Where do you think we're going? To the boundary line. And the bulls are finally trying to close the gap to the low of yesterday, which is bar 79 low. Most likely, close of yesterday is target. So now you understand how this works. I'm going to get rid of it. We don't need any of this anymore. So when in doubt, divide the trading range into 3 sections so you can actually swing from the lows or swing from the upper third. So this is basically legs in a trading range, just like 2 legs in a trading range. We're still stuck in a trading range, but I want to point something out. Look at this bearishness, okay? What does this look like to you? Maybe a double top bear flag? Could this be at the EMA? Bears have to show me something concrete for me to even consider selling. Not interested yet. But this is a sell zone because they sold here and there's a sell pressure. So they're selling here. Remember, you're at the top of a trading range. You see a bar like 31, you need to take profit and get out because they're going to want to sell it. That bar 31 is as big as the bar 28, right? So it is designed by the market makers to believe in you that this is breaking out and it's strong enough to buy to close. Look left. If it's a trading range, that means you gotta have to trade it like trading range. That means there are sellers there, sellers at the open, sellers at the high, maybe a 2-point, 5-point, 10-point above, but there will be sellers. So it's best to take profit with that. That's a gift, basically, that bar, okay? It's just telling you you're trying to sell into something climactic, okay? So those of you who trade with supply and demand zones, look at this impulse move, 1, 2, 3, 4 impulsive bars. Where did that sell originated? And it got a second leg even. It originated right there. So when the price gets there, take profit and reverse. That's the first sell. If it closes as a pin bar, a strong bear bar, chances are it might get a continuation, okay? But it's always going to try to sell it twice. So it's going to test, it's going to come down, it's going to test again. That second sell would be a lot more profitable, okay? So when I say it's a sell zone, buy zone, I'm basically telling you it's either a support, resistance, or supply and demand. Now, you can differentiate whether or not it's a support or, it's a resistance or supply. How would you differentiate that? When an area, after it buys, is strong, and suddenly it reverses and it gets consecutive, minimum 3 bear bars, better if there's more. I like it when it's 5, okay? When the price, especially if that area never been mitigated, selling will be strong. Now, there was a little mitigation there. What is mitigation? Well, look. If the selling began here, right there, right? Look. You see that bar right here, bar 13? It tested literally. Look. That is a form of a mitigation. Okay? One tick. They're testing that bar, but they could not do it twice. So chances are this is a strong supply zone, and when you get there, you can actually literally, sell. I'd like to sell either the open or smack in the middle, like 50%. So if I actually measure this, right, and if I put a 50% sell order with a stop, literally 1 or 2 tick above that bar, 11. So my stop is nearby, and I can go for, I don't know, they sold 4 points, just about 4 points and an extra tick. I can grab, look at the ATR. ATR says 626, 625. Half is 3, add another tick, 3 points an extra tick. I can scalp, 3 points an extra tick. I can scalp. My stop is still there. I'm still in my sell. I'm still looking to see if the bears are going to be able to sell it. If this bar closes bearish on its low, that means the supply zone is still selling. Now I can take that stop and put it in my entry area, maybe 1 tick below to have break even +1. And then I swing it down to a key price level, possibly with 2 legs. But be prepared. We're probably going to come back and test it and then maybe sell. Sometimes these levels are weak, okay? They may not sell, right? But right now, how I know that this is a strong supply zone, it's because of this. I don't care if it's a trading range or not. It's still a strong supply zone because it had a impulsive 4 bear bars closing, 3 of them closing on their lows. So I know supply zones are not in the, Brooks trading course, but support and resistance, that section covers it all. So it's the same thing, literally. I'm just giving you guys a little bit more clues on how to differentiate the two. But just go with the supply and, support and resistance, the same thing. So basically, we're testing the TR high, so you know that's resistance. You know there are sellers waiting there. So if you were long, take profit. You don't have to sell anything. You could just wait for a second bear bar, okay, and then sell. Or if you want to sell, what you can do is you can put a maybe sell stop order 1 tick underneath with a stop above, and you're going to try to get maybe a 4 points, 5 points out of that if you're lucky. But when would you get that? Well, if you're selling from a resistance, if you're selling from a supply zone, if you're selling a 3 push wedge, can we get that 3 to 5 point scalp? Well, that's the 4.5. So let's see, that's 3 points right there. Okay, say that's your initial scalp because ATR is 6.5, right? So you're basically trying to get half of that. And then 5 points, that's 6. 5 points is here for the scalpers, right? So you sold and your stop is above either that high or that high. With a tiny little risk, you're selling. You're hoping to make that initial half the ATR and bank that. Put it in your pocket, right? Let's see if we can make that 3 point. If it doesn't make that 3 point, it's because it's probably going to go back up and test and then sell. Remember, second sell. Because you're selling against 1, 2, 3, 4 bull bars. If you actually put a trend line, what is breaking that trend line? What's breaking that trend line is that first bear bar. So you're trying to sell with a first sell. First sell is not that strong. You always want to wait for the second sell. That's what L says. I know I heard him say it like, I don't know, 100 times already. So now, for bulls, what can go wrong? Well, we do have, for bears, what can go wrong if they cannot sell it? We have a strong leg, right? And we're at the highs. If you do not see consecutive bear bars or any kind of bear pressure, it's because bulls are trying to break this. They've always been wanting to close this gap and get up there. Now, what can I do? Well, I'm going to get rid of all of this. You can, or I'll just, no, I'm going to get rid of it because it's too. Now, if I'm bullish, I'm going to measure my range. I'm going to measure it, right? Now, for bulls, if there's no continuation, this is a terrible continuation. They try to sell it. Maybe they made a 1 or 2 point, I don't know. This is where the bulls are trying to go, to the breakout. Okay, but first they need to close a breakout bull body right there, right? So this is the first flag. Second flag, they're trying to put the third flag, and so we have room to go up. So I generally use the Fibonacci levels and I measure. So my targets are first the magnets, that, and the first shallow target right there at 40.58.50. Now, what happened here? Well, bears couldn't even do decent scalping. All they got was a 2-point scalp, right? So, and 2-point scalp is still a great scalp. That's fine. But this is still a supply zone or a sell zone or resistance. And this is the second time we are testing. Remember what I said earlier. If you locate some kind of wedge, okay, that's the wedge. I'm just showing you, but you don't need that. Maybe fine, I'm not going to do this. I'm going to do this. That's the first sell. Bears are looking for a second entry short. Okay, so I warned you about bulls going and testing here. Now, this is still a strong sell zone because no body or wick of that candle breached the high of bar 11. So this is still bearish. Machines will try to sell it twice because of this impulsive move down, which got a second leg down and a breakout, even though the breakout didn't yield anything significant. But it is still a strong area that will try to sell at least twice. Now, if the sell fails, then I'm going to look for a bull bar, closing on its side, maybe a quick pullback, then I'm going to go for that 123.6 or whatever, that fib level. Or just go half the size of this trading range projected up. And then I will, if I see strong bull closes, then I'm going to get what? A measured move target up. Because bears failed to get their measured move. Now it's bulls' turn to possibly try for that. But first, I need to give bears room to sell this. So everything is in stages. Do you guys have any questions? I mean, I'll take a couple of questions before I leave. Anytime these zones get, especially supply and demand zones, get weaker when a body closes above it, above that body, that makes up that zone. But if it's just a wick, it's still okay. It's because it's running some stops. But if the body starts to close above a zone, that's it. That weakens, and we could just break out. Bulls are still trying to break out, and they're not able to sell anything because this is still small pullback bull trend. Okay, but nothing has closed above bar 11. Nothing has breached above bar 11. It's still a sell zone, and bears will try for the second time. So I don't jump into trades if I don't see these criteria meet first. This is still a wedge. It could be double top higher high, and that could still become a major trend reversal. But look at the sell bar. I mean, that's a pin bar. Yes, it's nice, but it is a terrible sell signal, isn't it? So now is either bears need to close a strong bear bar, preferably below the low of bar 34, breaching the low of bar 34 with a bear body and closing below. That would be your second sell. but I don't see it. So can I sell? Now, if I do sell, you need to put your stop two ticks above bar 34. That is a small, tiny set, risk, but it can still kick you out of your sell because you're trying to sell something that is not even a second sell, okay? So might as well don't enter. First sell as bar 33, breach below bar 32, and it closed the bear body on its mid, but it failed to close one tick below the prior bar's low, but it's still technically a first sell. So where is the second sell? I want to see that if I want to sell this, at least into the EMA. I don't see it. We're now always in long. It's weak, but it is still always in long. Can you tell why bar 11 is still good for bulls when it closed? I never said that. I actually said there's a wedge there. It's not good for bulls. It's actually good for bears. Bulls try to buy the close. It never worked. So they bought underneath that bar to break even, and they did. And once they broke even, they either got out and they gave up right there. And it made a lower high, wedge top, and it sold. I don't think I ever said that it's good for bulls. Damn. It's funny. I actually read it and laughed. Well, I don't know. Well, hopefully we're going to break out or we're going to swing down. I don't know. We're going to do something. So I hope that answers mind gap. The other question, is it best to be flat at this point when waiting for either double top reversal versus bull breakout, or should we already choose a side? Well, if you want to choose a side, I kind of explained that, which side that you should be on. Look at bar 27 did not get continuation. If this is a wedge top and you want to sell it, don't you want to see, okay, another bar, maybe testing that? And if a bar like 27 is not getting continuation, I actually warned you guys, look, bulls try to close, and they did close a really nice, okay, trap bar. This was your first trap, bar 25. But they couldn't get the second. So I was like, I don't want to buy this. I want to wait a little bit. And it just came back down. Why? Because I measured and I said that's probably 50% pullback, 66 something. I don't know. Say 50% pullback. Now, many machines got out there because they did not see a second bull consecutive bar closing above EMA. So I couldn't pick a side saying that I'm always in long bulls. But the bulls are closing really nice bars and the bears are not able to get continuation. Now, we got this bar, but it's not closed below the EMA. So I need two bear bars to go back to always in short bears. I've got a really nice bar 27. Okay, that's promising. Fine. Are they trying to swing it and give me some kind of bear flag? But where is the continuation after bar 27? In order for me to become bear, I need to see another bear bar. Instead, I said, watch out. This could end up being a bull trap. I'm sorry, bear trap. Haven't I said that? I said that. So what happened? That's a bear trap. And the bar 28 is the trap bar. It traps the bears and goes right back up. It closes above the EMA. Then I said, I have two consecutive, not consecutive, but I have two strong bull bars closing. Chances are this is another flag, and we're going to go test that. I actually bought that close. And then enter another order right at the EMA, and I took profit there, and then I took profit with my runner. So, but I did take profit at the highs. And then I saw this 1, 2, 3 wedge. So now I'm wondering if this is a trading range and the trading range highs are holding the bulls down, there must be some kind of wedge in there, because in the trading range setups, you get beautiful wedge setups. And you can trade those wedge setups, right? So you have bar 19, bar 26 high, and then you got the bar first sell, bar 32 high, and a double top higher high. Bears are trying to get the second entry short. Hello, second entry short. Now, if you sold that, your stop is right there. And basically, you're looking for maybe a pullback to the EMA. So now, can I sell this? Well, if I sold it, I'm definitely going to look for maybe a 5-point scalp or maybe a pullback to EMA. I want to see a continuation. So if I sold this, okay, double top, neckline, I need to see bears test that neckline 33 because there are probably sell stop orders underneath waiting. And you want to see a bear bar closing there, okay, but you're in a scalp mode, okay? You're basically not swinging, not against these bars. You're in a scalp mode. You always start as a scalp, okay, because you don't know if it's going to become a, successful swing. So you try to get whatever you can from the market. Now, the only problem I'm having here is this bar 34. It's not a good sell signal bar, but we do have a second entry short. Now, in order for second entry short to be successful, bears need to close this bearish, okay, so that means it's continuation. If they cannot print a bear bar on its low and follow through bear bar right after the second entry, that means we're going to get a bull flat, double bottom, bull flat, wanting to test a high and break out. So it's basically a fight. Right? So the bulls want to break out. Bears are trying to get a second entry sell from the sell zone. And I don't know. If I sold this bar's close, all you got was a perfect 1-point scalp. That's all I got. So now, in order for me to get more, I need this bar to close bearish. If it doesn't get close bearish, what am I going to do? Am I going to wait for it to come all the way up here and hit my stop 2 ticks above that high? No. If I see this as a failed continuation, I'm going to hit close and get out. I don't care. If it closes as bullish, what is that? 4, 5, 6, bar 36, I'm out. I cannot be sitting in a losing position. When am I going to be winning? When will this position will be winning? Well, my stop is above bar 34, and then bar 36 actually closes bearish. Then I stay in my short. Bearish. Then I stay in my short. Okay, so this is still the second entry short for bears. Bears want to swing this down, but can they? It's possible, but they have to do better. Okay, I am done with my session. I'll be back after a quick break, and I'll take a look at some of the encyclopedia charts to see if there's something similar to what's happening today. I will see you guys Wednesday morning. I will be in the Discord, and tomorrow is going to be L. Brooks, but I will be lingering in the afternoon because I want to trade. Okay, so see you guys later. The session is now over.